I'm not sure if you heard our conversation about dinosaurs and growth names. How do you play this market when you continue to see sort of this divide between tech names, high growth, and sort of maybe the more solid value ones?
Yeah, we just put out a report this morning looking at, and we looked more than the last week or two. We looked quarter to date, the last couple of months. And what we're finding is that tech broadly defined. So these are obviously large cap, heavy, a heavy basket. But the stocks are running up like 12%, and the earnings are only driving 2% of that, which is, which means that it's multiple re-rating. Now, if you compare that to old economy, boring stuff you guys are going to find uninteresting and aren't talking about, they're underperforming tech by a mile, but delivering much, much better earnings because this inflationary supply chain constrained environment is helping a lot of, old economy, dinosaur kind of industries and in their earnings, but it's not showing up in their stock prices. So in many ways, there's even a bigger dialogue or dynamic going on here.
All right. So, Jonathan, are you talking about trading these names into next year when we're going to get potentially a different monetary policy environment? Are these still long-term plays, these sort of boring names that you talk about? Specify which ones also.
Right. So first of all, if you take a look at this and say, I'm a growth investor, I believe in these technologies, and I'm looking not for what the trade's going to be, but what is it going to look like for a year or two or five, then you want to buy this basket broadly. I really do like these bigger names that have high margins that are able to sustain growth, but that's kind of where my focus tends to be. But nearer term, what you find is that a lot of this comes down to what's going on with interest rates. The yield curve is flattened a ton, and when that happens, it tends to be pretty good for growth stocks compared to everything else, and very good for technology names compared to everything else. So as much as you want to think about the technologies, the environment, if the Fed pushes harder on getting inflation under control, the weird winner on this ends up being tech companies.